Welcome, future traders. Today we begin a journey into the largest and most liquid financial market in the world, the foreign exchange market, the Forex or FX. Think of it as the grand, bustling marketplace where the world's currencies are bought and sold. It's a decentralized global network. It operates 24 hours a day and 5 days a week, from the moment Sydney opens on Monday morning to the moment New York closes on Friday evening. This constant activity is what makes Forex so dynamic. It's the engine of international trade and global investment. For individual traders, it presents a landscape of opportunity to potentially profit from currency value fluctuations. So, what exactly is Forex trading? At its core, exchanging one currency for another. Imagine planning a trip from the United States to Europe. You'd exchange US dollars, USD, for euros, EUR. When you do, you're participating in the Forex market. Traders do this not for travel. They do it to make a profit. They speculate whether one currency will rise or fall against another. If you believe the euro will strengthen versus the dollar, you buy the euro. If you're right, you can sell it later for a profit. The scale is almost impossible to comprehend. Trillions of dollars are exchanged every day. That volume is driven by a diverse range of participants, colossal international banks, individual retail traders at home. For businesses, Forex is essential for cross-border operations. Example, a European company buying raw materials from Japan. They must exchange euros for yen. For investors and speculators, it's strategic analysis, economic news, geopolitical events, market sentiment, all converge to create tradable price movements. Understanding this purpose is your first step to confidence. It's not just numbers on a screen, it's the flow of global capital. Every price tick shows a shift in the economic relationship between two countries. By learning to read these shifts, you learn the language of the global economy. There is no central physical location like the NYSE. Instead, it's an electronic network of banks, brokers, institutions, individual traders, all connected and trading with one another. This gives Forex its character and accessibility. Anyone with an internet connection can participate. In the world of Forex, currencies are always traded in pairs. You are simultaneously buying one currency while selling another. This is why you will always see currencies quoted together: EUR, USD, USD, JPY. The first currency in the pair is known as the base currency. The second is the quote currency. For example, EUR, USD. At one point, 0800 tells you how many units of the quote currency are needed to purchase 1 unit of the base currency. So it would cost you $1.08 to buy 1 euro. The base currency is always the basis for the trade. If you buy the pair, you are buying the base currency. Let's look at two of the most popular pairs to make this clearer. The EUR-USD, often called Fiber, is the most traded currency pair in the world, representing the two largest economic zones. When you buy EUR-USD, you are speculating that the Eurozone's economy will strengthen relative to the United States economy. Conversely, the USD-JPY, or Gopher, pits the US dollar against the Japanese yen. If you sell USD-JPY, you are anticipating that the Japanese yen will gain value against the US dollar. Understanding this relationship is crucial because every trade is a judgment on the relative strength of two economies. You are never just trading one currency in isolation. Now let's discuss time frames. A time frame refers to the period that each candle or bar on your trading chart represents. Split screen, 1 mm, 5 mm versus 4 mm daily charts. This choice is deeply personal and defines your trading style. Short-term traders, often called scalpers or day traders, might focus on the 1-minute M1 chart or the 5-minute M5 chart. They aim to capture small, rapid price movements throughout the day, opening and closing multiple positions. Their world is fast-paced, requiring intense focus and quick decision-making, analyzing the market's micro-movements from moment to moment. They are not concerned with the long-term economic forecast. but rather with immediate supply and demand. Swing traders and position traders, on the other hand, operate on a different clock. 1 hour, H1. 4 hour, H4. Daily, D1. They look for swing highs and lows, holding positions longer to capture bigger portions of a trend. Position traders take this even further, using daily, weekly, W1, or monthly, MN, charts. Their trades can last for months or even years. Your chosen time frame will filter the market noise and help you focus on trading opportunities that align with your strategy and personality. The Forex market's 24-hour nature. It follows the sun around the globe, moving from one major financial center to the next. This creates distinct trading sessions, each with its own unique characteristics. The 4 primary sessions are Sydney, Tokyo, London, New York. The trading week kicks off with the Sydney session, typically the quietest. Followed a few hours later by the Tokyo session. Tokyo brings significant liquidity to Asian pairs, USD, JPY, AUD, JPY. Major economic data from Japan and Australia often releases then. The rhythm dramatically picks up when London opens. London is the heart of the Forex market. Largest daily trading volume. Liquidity peaks. Spreads tighten. Major European pairs. EUR USD. GBP USD. USD CHF. Many big moves happen in London as institutional orders flood the market. For many traders, this is prime time. The most dynamic period is the session overlap. The key overlap is London and New York. For about 4 hours, both centers are open simultaneously. This creates a surge in volume and liquidity, often leading to strong, sustained price trends. Major US and European economic news can hit then, causing sharp moves. Many professionals consider this the best time to trade due to high liquidity and minimal slippage. As London winds down, New York takes over to close the trading day. The US session is heavily influenced by data releases such as employment reports, inflation figures, Federal Reserve announcements. The US dollar is on one side of nearly 90% of Forex trades, so activity stays high. Understanding the flow, quiet Sydney open, explosive London, New York overlap, final US hours. The Forex market is a complex ecosystem with a diverse cast of participants, each trading for different reasons. At the very top of the food chain are the major commercial and investment banks, often called the interbank market. These giants trade massive volumes of currency for their clients and for their own proprietary accounts. They create the market, providing the liquidity. Their enormous order flows can single-handedly influence short-term price movements. Next, we have other large-scale players. Central banks, US Federal Reserve, European Central Bank, large multinational corporations. Hedge funds corporations participate out of necessity. Example: a German car maker selling cars in the US converts dollars back to euros. Hedge funds use sophisticated strategies to trade currencies for profit. Then, there are the retail traders. Thanks to the internet and online brokerage platforms, individuals can access the same market as the big banks, on a much smaller scale. Retail traders speculate from home or on mobile devices. While one retail trader's capital is a tiny drop, the collective volume of millions makes retail trading significant and growing. We trade for financial independence. We trade for supplemental income. We trade for the intellectual challenge. In conclusion, the Forex market is a fascinating intersection of global economics and individual opportunity. It's the market for exchanging currencies. Instruments are traded in pairs like EUR or USD. Time frames shape your trading approach: 1-minute charts, daily charts. Major trading sessions create a 24-hour rhythm: Sydney, Tokyo, London, New York. Finally, we've identified the key players, from central banks to retail traders. This is just the beginning of your journey. I encourage you to continue learning practice on a demo account. Slowly build your understanding of this incredible market.